Wall Street ends the trading session lower as investors race for new auto tariffs. Dow Jones closes more than 100 points lower while the S&P 500 drops 1%. The 10-year Treasury yield ends at a one-month high. President Trump announces 25% tariffs on all cars not made in the United States. Stocks in Asia reflect Wall Street's moves and trade in the red. GIFT Nifty is also implying a lower start for the Indian market. Oil prices continue to rise on the back of mounting concerns about tighter global supply following the U.S. threat of tariffs on countries buying Venezuelan crude. Gold prices ease as dollar and U.S. bond yields tick higher. Sources tell CNBC-TV18 that the ongoing trade talks between India and the United States are going well even as Trump's tariff threat looms. Sources add that the Indian industry is seeking an early bilateral trade agreement before 2nd April. The Atlantic has published the full text of Signal group chat between senior Trump administration national security officials. The chat reveals that the defense secretary shared details of military operations against Yemen's Houthis. Hello, good morning. You've tuned into CNBC TV18. You're watching Power Breakfast with me, Vinny Motiwala. A quick look at what the Asian markets are doing this morning, and that's what we should be starting with because we're seeing some pressure coming in on the Asian markets. Look at the Taiwan index, that's down 1.3%. Hang Seng is down almost 2/10 to 0.3% in today's trading session. We're seeing red across the screen for the Asian markets. So ASX 200 is in the red. Nikkei is trading with cuts of more than 1%. Shanghai down almost 0.5% as well. So nothing sort of a pretty picture coming in for the Asian markets because the handover from the Wall Street is weak as well. And look at the Nifty implied open. We're expecting a day of red coming in for the Indian markets as well. Nifty implied open as of now is indicating a 17-point downtick, so a muted start. But this is what was indicated yesterday. A muted start is what we were seeing, but we saw that fall coming in, and maybe that is something that could continue for the Indian markets. Yesterday, the Nifty was down almost 0.7% at close, and today seems like red will continue given the updates that we have coming in from the U.S. market specifically. And talking about the U.S. markets, Wall Street that ended lower as stocks hit sessions low, and this came in after the White House said that President Donald Trump has unveiled new tariffs on auto imports. S&P 500 that lost over 1%, while the Dow Jones fell over 132 points. The tech-heavy Nasdaq that shed 2% as well as Nvidia's shares dropped nearly 6% in that trading session. This action came ahead of the broad range of additional levies that were expected to be revealed next week. That's what everyone's keeping an eye out on. And Trump said that these tariffs will likely be more lenient than the reciprocal tariffs. But we surely had some updates coming in on the auto front in terms of the auto tariffs, the 25% over there across the board for countries, especially in terms of auto sectors that are cars that are not made in the U.S. Now, let's also listen into Alan Blinder, former Fed Reserve Vice Chair, talking about Fed's uncertainty around the U.S. economy.
They have a lot of uncertainty swirling around us, around the U.S. economy of all sorts, some of which they've never seen before, like are we going to attack Greenland or something like that. So I'm sure the discussion at the last FOMC meeting was quite full and quite interesting and raised a lot of questions. They don't want to name names. They'll get themselves embroiled in politics. But, you know, when they raise an uncertainty flag, it means something. If somehow these succeed, unlike previous tariff episodes, in bringing a lot of American jobs back on shore, you might say that's a gain.
Okay, on that is a global market action that we have for you all this morning. But how will the overnight cues impact the Indian market? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for in today's trading session. Vivek as well as Sudarshan, very good morning. Vivek, starting with you. Yesterday, we did see that subduedness coming in the market. You know, not a green coming in after 7 days, 8 days of that positive sign. Today also seems like a muted trade day coming in for the Indian markets.
Good morning, Vinny. Absolutely right. So, that's what we need to keep an eye out for. Also, remember the kind of handover that we received as far as US markets are concerned, not very encouraging as we start off the day. The US markets ended in a negative territory. Nasdaq actually ended more than 2% lower yesterday. And on the other hand, oil prices actually gained over 1%. Brent ended near the $73.8 a barrel mark. And like you mentioned yesterday, both the Nifty as well as the sensex, like you mentioned, snapped a 7-day winning streak, seeing profit booking at higher levels. And in fact, both Nifty as well as the sensex cooled off quite significantly after the opening highs. The mid-cap and small-cap index, continued to see a fall for the second straight session, and advanced decline ratio was quite muted, especially in the broader end of the markets. Now, day before yesterday, you did see IT stocks outperform quite significantly. Yesterday, that entire outperformance was reversed, and in fact, IT pack was amongst the weakest yesterday. Advanced decline ratio largely in favor of the declines, and yesterday one stock that stood out was Siemens. This was on the back of the fact that the company received the NCLT nod for the energy business demerger. But today is a very important session. There is quite a lot that is expected to, quite a lot of events that are lined up. First is, remember, it's the expiry session. Along with that, you also have to keep in mind that the Nifty rejig that is effective tomorrow, you will actually see the flows coming in today's trading session. And along with that, there will be the overhang of tariffs, especially as far as the auto sector is concerned. GIFT Nifty as well as Asian markets indicating a subdued start for our markets.
Okay, Vivek, thank you so much for that. Keeping an eye out on how the Indian markets open and trade. But which are the important stocks to watch out for in today's trading session? Sudarshan is here to give us that list. Good morning, Sudarshan.
Good morning, Vinny. So first up, auto companies will be in focus because US President Donald Trump has signed auto tariffs. Tariff will be imposed that would be of 25%. It will be effective April 2. Second is Infosys. Company expects refund of rupees 2,950 crore from Income Tax Department, and this is for the assessment years of FY17 and FY20. Wipro has announced mega deal of 500 million pounds, and this is a 10-year deal with UK's Phoenix Group. Ashok Leyland, its EV arm Switch Mobility to close Switch UK's manufacturing and assembly units, and companies say it's because of slow transition to EVs in public transport in both UK and Europe. HUL has appointed Rajneet Kohli as Executive Director of Foods Business. For Bajaj Finance, Bajaj Finserv has converted warrants into equity shares of Bajaj Finance, and post the conversion, its holding has risen to 51.39%. BSE to consider bonus shares on March 30th. NBCCI signed MOU with Mahatma Phule Renewable Energy and Infrastructure Technology, and this order value is seen at 25,000 crore and will be executed over 3 to 5 years. UPL has sold 8.93% stake in Advanta Enterprise to Alpha Wave for 2,150 crore rupees. Max Financial, as per sources, promoter Max Ventures may sell 1.6% stake in the company via block deals today. And for JB Chemicals, KKR is likely to sell 10.2% stake in company via block deals, and for this offer price is 16.25 per share, which is a discount of nearly 5% to current market price.
Okay, Sudarshan, thank you so much for that. But on that note, we're going to step into a very short break. On the other side, we'll focus on the developments revolving around the White House. So stay tuned in for that. Welcome back to Power Breakfast on CNBC TV18. Now getting you the latest on Trump-related developments. We have Dia joining in with us in a special segment, Trump Watch.
We begin with developments in international trade. President Donald Trump signed an order for 25% tariff on auto imports, expanding a trade war designed to bring more manufacturing jobs to the U.S. The president said the tariffs would go into effect on April 2nd and that the U.S. would start to collect them a day later. Let's listen to what he said.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
In response, Canada has pledged a $2 billion Canadian strategic response fund to bolster its auto manufacturing sector. This initiative aims to strengthen the supply chain, which faces significant threats from potential U.S. tariffs. Carney articulated a vision for an all-in-Canada network for auto parts, emphasizing domestic production to minimize cross-border dependencies. Trump also said he would consider lowering tariff rates imposed on China to secure support for sale of the U.S. operations of TikTok to an American company.
I'm worried about our country more than anything else with respect to TikTok. And China is going to have to play a role in that, possibly, in the form of an approval, maybe. And I think they'll do that. Maybe I'll give them a little reduction in tariffs or something to get it done, you know, because every point in tariff is worth more money than TikTok, if you think. Every point. Tariff is a much bigger world, and TikTok is big. But every point in tariffs is worth more than TikTok.
Copper prices surged to record high after the United States said it is also considering imposing tariffs on copper imports, potentially within weeks and not months as was expected earlier. Shifting to geopolitical news, President Trump has reiterated his desire for the U.S. to annex Greenland ahead of Vice President Vance's scheduled visit. Speaking in an interview, Trump said, and I quote, "It is an island that from a defensive posture and even offensive posture is something we need, especially with the world the way it is, and we are going to have it." Finally, regarding national security and information leaks, The Atlantic released the transcript of a group chat between top U.S. officials on Signal that inadvertently included its top editor, revealing how Defense Secretary Pete Hegseth shared details of the timing and weapons system to be used in attacks against militants in Yemen. The transcript included a text message from Hegseth to the full group giving precise times for 2 waves of U.S. attacks against the Houthis, featuring details of what weapon system would be used. Trump has again dismissed the significance of a breach, saying that there weren't details in the text and there was nothing in there that was compromised. Following the security concerns, Elon Musk has offered his technical experts to investigate how a journalist was added to an official chat on these strikes, the White House said on Wednesday. That's all for now. Back to you, Vinny.
Thank you so much for that, Dia. But let's move on. And following Donald Trump's earlier comment on being lenient with reciprocal tariffs, CNBC's Eamon Javers is decoded what this means. Listen in.
The president, speaking to Newsmax yesterday, said in terms of the April 2nd tariffs next week, he's inclined to be more lenient than reciprocal, because if he is too reciprocal, then that could be too tough on people. So I talked to a White House official this morning to figure out what exactly that means, more lenient than reciprocal. And what I'm told here at the White House today, Carl, is that what the president is signaling here is that he is not going to take into account all the non-tariff barriers that countries raise against the United States. Remember, early on in this debate, the White House said that they would include things like a VAT tax, wage suppression, currency manipulation, those kinds of things in their calculation of a tariff attack on the United States, and therefore that would be part of the reciprocal tariff back. Now what I'm told is that they're signaling they may not go all the way to including all of those non-tariff barriers in determining what the reciprocal tariff rate should be country by country. How are they going to decide that? I'm told it's more or less going to be on a case-by-case basis, but what they're signaling is that a lot of the stuff they said they would calculate against, they may not actually calculate against. So it is a sort of lessening of the severity of the potential tariffs that we're talking about based on what they had said before. Now, there were a lot of critics who said, as our Megan Costello points out, that some of these non-tariff barriers should never have been included in a discussion of tariffs. Nonetheless, the White House signaling today they might not go all the way in including some of those non-tariff barriers next week.
Okay, on that note, we're going to step into a very short break. We'll get you the cues in the world of commodities after this break, so stay tuned in. Welcome back to Power Breakfast on CNBC-TV18. Now, as we closely approach the 2nd April deadline, the Indian officials and U.S. trade delegation is in the process of working out the contours of the bilateral trade agreement with India. Abhimanyu is joining in with us to give us details on this front. Abhimanyu?
Sources have indicated that the Indian industry is paranoid over the impact of reciprocal tariffs by the United States, which are slated to kick in on the 2nd of April, stating that the talks for a bilateral trade agreement between India and the US are going on well. Sources further said that the Indian industry wants conclusion of a BTA as early as possible to avoid the impact of the proposed reciprocal tariffs with jobs at stake. Sources added that the Indian industry wants to avert or delay the tariffs kicking in on the 2nd of April and is writing to the government to protect itself from the impact of reciprocal tariffs. Talks are underway between India and the American delegation, which is in New Delhi, till the 28th of March for a BTA between both the countries. As on date, reciprocal tariffs have not been applied by the US. Both the countries are aiming to increase their bilateral trade to $500 billion by 2030 by signing a BTA within 2025 itself. This is not the first round of negotiations yet, but both the sides are looking to finalize the contours, the negotiation schedule and the terms of reference of the proposed BTA. It's likely to be finalized in 2 tranches, with the first tranche expected to focus on issues pertaining to goods trade. The US has sought greater market access in certain industrial goods, automobiles, wines and agriculture, while India may seek duty cuts in labor-intensive sectors like textiles.
Thank you so much for that. But let's move on. And Manisha Gupta is joining in with us to give us the update in the world of commodities this morning. Good morning, Manisha.
It's actually started with a day of gains for many of these commodities. I'll start with the crude oil prices, which are trading at a 4-week highs, and this is on the back of US threatening to put 25% on all imports from Venezuela in sense of crude oil. Apart from that, it also is about US sanctions on Iran oils. Markets also are reacting to the US inventories declining by more than what they were anticipating at 3.3 million barrels. So all of these factors clearly have been supportive. The support also continues for copper prices, especially for COMEX, where we are yet again trading at an all-time highs. And with the kind of overnight gains that we have seen, COMEX copper is up by 32% for this year right now. But the markets are putting in a word of caution because we've seen the prices gain up too much, too soon, a lot of sentiment there. And even if we are looking at reciprocal tariffs coming in slightly lower than what the street is heated about, you could be looking at some profit taking onto this one. But the markets tell you that it is buy on dips for many of these metals, looking at the supply disruptions and the demand expectations going forward. A quick word on gold prices, and there also have been some gains here. Well, it is all about the tariff concerns, the slowdown potential concerns, which is supporting the gold prices, with most banks and brokerages now telling you that you're perhaps looking at prices much higher from where they are right now, with the forecast coming in anywhere between $3,100 to $3,300 per ounce for this year itself. By the way, the markets will now watch out for the US Fed official speeches, and there are 4 of them slated before this weekend.
Thank you so much for that, Manisha. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.